What's happening in the market through the month of August?
You're definitely going to want to watch this one.
Real estate is all over the news. Everyone is talking about it. There's words getting thrown around like housing recession and are we in a bubble? And I don't think many people really know what they're talking about, to be super clear, because these headlines are all juicy. And then when you go in and read the data and understand what's actually happening at the local level, it doesn't tell the same story. So I'm going to debunk all these headlines right now with your August 2022 market update. So here's what's happened in Chester, Delaware, Montgomery counties, as well as the city of Philadelphia through the month of August. The number of sales are down 5.1% to 16.5%, depending on which county you're in, year over year. There are less homes selling, there is no question about it. The median sale price in the suburban counties is up 8.1 to 10.1% year over year, and in Philadelphia, we've seen a 1.9% increase in the median sale price from this time through August in 2021 up until now. So prices are still going up and a much more rapid rate in the suburban markets. Days on market in Chester, Delaware, Montgomery counties is hovering between 16 and 19 days. In Philadelphia, it's 33 days on the market. So still very low. Homes are selling in just about a month or less. And inventory, the big question, the big complaint that a lot of people have, in the suburban counties, it's hovering between a 1.02 and a 1.04 month supply, meaning it would take a little over a month to sell all the existing listings that are out there right now. And in Philadelphia, we're at a 3.3 month supply. So we're seeing that inventory, it's inched up a little bit in every county except Montgomery, including Philadelphia. So Philadelphia, Chester, Delaware, there were more active listings than pending sales last month. Montgomery, it was just about the same number. And in terms of what's happening with list to sales price ratios, so how much are consumers getting for their homes? How much are home sellers selling relative to the asking price? I'm going to give you two numbers here because it's showing that the market's changing a little bit. So year over year, we're seeing anywhere from 101.7 to 103.1% is the average in the suburban counties, and an average of 97.2% of the asking price in Philadelphia. However, for the month of August, we're seeing a range, just those 30 days, just the month of August, a range of 100.7% to 101.4%. So it's dropped down a little bit. They're not selling as far above the ask as they have been, and 95.9% in Philadelphia. So we've seen a little bit of a drop there in list to sales price ratios. And lastly, we know mortgage rates. There's a Fed meeting coming up this week. They're in the 6% range. We're seeing people use adjustable rates to buy the rates down a little bit. Mortgage rates have clearly gone up since the beginning of the year. So what does all this mean? And here is where the rubber meets the road in these reports. It's great to talk about stats. How does that affect people looking to sell a home and people looking to buy a home? So sellers, the opportunity available is this. We're still seeing very low supply of homes. There is less competition for you than I'm clear there will be in the spring of 2023, and especially after the first of the year when we see a lot of home sellers come to the market to try to beat the rush. So if you're thinking about selling next year, I'd be looking at moving that time frame up, because despite news of a recession and news of a housing bubble, we are still seeing homes sell above the asking price in the suburbs and very close to the asking price in Philadelphia. And the best homes are definitely selling quickly as long as they're marketed right and they're priced correctly. There is no question about that. Even with rates going up, we're still seeing price appreciation. What I also know is that we're going to see inventory start to continue to climb, and we've got a ways to go before it becomes an even buyer and seller market. I don't want to be at the end of that cycle if I'm a seller and I'm thinking about cashing out or downsizing or even getting into a bigger home. I want to be at the beginning of it. Now for buyers, there's still opportunity, and I'll show you why. Because rates are historically low. They're not at 3%. They're not at 4%. They're in that 6% range. We've seen them jump down to the 5s and come back up. And rates are still historically low versus the double digits rates we saw in the 90s and the 1980s. So the cost of money has gone up, no question. The flip side is you're usually making a payment if you're a buyer. So if you're a first-time home buyer paying rent, rent is continuing to go up as well. So the question is, do you want to buy in where there's still appreciation happening. We're looking at 8 to 10% year over year in the suburbs, 2% year over year in Philadelphia, and that really varies by neighborhood. Philadelphia is a very diverse area. So you're losing out on appreciation, and you're also either paying your own loan or you're paying somebody else's mortgage. So whose payment do you want to be making is the question. And there is a cost to renting versus the ability to build your net worth if you're paying down your own mortgage. So there are opportunities there, and with prices predicted to go up again next year because of the supply and demand issue. It's really supply versus demand right now. Supply's low, demand is still high. You're going to be okay long term. It's just a matter of where do you want to be putting your money. So if you got questions specifically about any of this, reach out, let us know. Get in touch with a local agent because the headlines are a bunch of BS and the local data is what actually matters.
You're definitely going to want to watch this one.